Dear students and working accountants, welcome to my Smart Tally Brain YouTube channel. My name is Babura from Hyderabad. Before entering into the topic, an advice to you. If all of you want to learn Tally Brain, GST, GDST, everything perfectly, gaining expert knowledge and become expert accountants, please follow and practice all my videos in the same serial order which I uploaded. So I have given numbers in the same serial wise. You follow them and practice them. You'll get good knowledge and you'll become expert accountants. And then everyone visiting my channel, please don't forget to subscribe my channel. And if you are not already done, once only you can subscribe and click the bell icon and select all option. You will get notification for all the videos which I am uploading in my channel. And please share my Smart Tally Pen channel with all your friends or anyone who want to learn all these items. You already learn all these. So you share with them. And in the case of these videos, you each and every video you watch till the end. Don't skip, because if you skip, so in the later part, so the practical work done in the factory working in the Tally Prime, all this you will miss. Just you will only the theory in the beginning. So watch till the end, and at the end, if the video is good, please like the video, and below the video in the comment section, please post your comment, that is your idea about this video in the comment section without fail. Okay, and now and one more thing is, this channel and all the videos in the channel are completely free forever. You can learn, you can see any number of times, you can see the videos, so you can learn very well with this channel and videos free of cost. But in addition to this, I am running paid online classes also. Paid, they are not free. Paid online classes also. If anybody are interested to join the paid online classes, you please send your details like name, qualification, place, and what you do, your work, and all these details to me, and I will talk to you, and we will do it. I will send you the details of the course. I tell you the details of the course, and I will send you the link to join my classes. So in the June classes, I will send the link, and my contact details, are given in the about section of this channel. My mobile number and my email address are available. So you can send the details through email, or you can send the details through only WhatsApp, not calling, through WhatsApp only. You can send the details, then I will register your name, and before starting that, I will inform you. Mostly, I am planning to start the new batch from 1st of July. If the most students gather, even before that also, I will start the classes. So I will inform the classes and I will send you the link. Okay. Now, we enter into our topic. Today, our topic is this part 2 of the normal charge. The part 2 of the reverse charge mechanism. Already in the first part, in the last video, we completed the first part, that is complete provisions and all the details regarding the reverse charge mechanism, all the provisions of GST Act regarding this. Now, the second part, now we enter the practical part, that is practical work on Tally Prime. How to deal with accounting treatment of the reverse charge mechanism in Tally Prime. See, in the last videos I told you, first of all, that RCM is to be made applicable in the company. That is, we have to create the company. So creation is also same. Everything will be same. Okay. And then after creation of the company, affluent features will show the affluent features, company features. Or if it is an old company, you have to press F11. So you will get the F11 company features. And then accounting features are same. And inventory fees, everything same. But in the case of taxation, you go to the enable goods and services tax. In that everything is same, only except one. All this state, number, everything. And in the additional features, there is one topic, one item, like enable liability, it will be no. By default, it will be no. So enable liability on reverse charge. It should be made, it should be, enabled. We have to enable that by pressing yes, and we will it's not required. Okay. So with this, and then again accept, that is control A. So once the company, the company level, the GST, RCM is reverse charge mechanism activated. And then after that, in the ledger, we have to create the purchase and sale, then not purchase and sale, sorry, purchase and sale voucher only. Purchase and sale only for goods. We have to activate the transporter. We have to activate the transporter, and we have to activate the transporter. So for that, the transporter name and his area. The transporters may be registered or unregistered in the local area, and in the case of outside state also, that is interstate also, may be registered or non-registered. But only in the case of GTA from other states, that is interstate GTA, unregistered, the GST, is exempted. That is no reverse charge mechanism for that. So except that, registered GTA, even interstate, and within the state, registered or unregistered, everything this is applicable. So all the four we will create. So I created already. See, GTA, and one more thing I will tell you. GTA, first of all, GTA local registered. GTA local, will register the name X and Co or so and so transport like that. GTA local registered syndicatas and standard, and here we have to give the registration number regular. Registered means regular. So this Telangana is 36. So it is to be accepted. So local registered, and again local unregistered. So in this case, syndicatas and local. Local means the same state, and here you have to select as unregistered, and then this is accepted. So local completed. Then go to interstate. So interstate registered. Interstate registered, take it. So I am taking interstate registered as Tamil Nadu. So Tamil Nadu and regular. Registered means regular. Number starts with 33. That is the code number. That will be the full number. Okay. And this is the interstate registered. Then we'll go to interstate unregistered. So in this case, syndicatas, and giving the state as Andhra Pradesh, and we have to select the registration type as unregistered. So 4 types of GDS we created. 2 in the state, 2 outside the state, registered, unregistered, in intrastate, intrastate, and again registered, unregistered, intrastate. So interstate we completed, and then we have to open the service. What is the service? Paying freight to the GTA. So it is to be entered as, open the account as GTA freight, because there is no RCM on other freights, freight or freight to others, freight or transport charges. That's why GTA freight, for that only RCM is applicable. So open that GTA freight service, and in brackets you can make it as, in brackets you can make it as RCM. So RCM is applicable. RCM is applicable for this. RCM is applicable. So take RCM and it comes as a direct expense, because it is transporting goods to us. Because we're getting the goods, the transport charges paid for the goods, it will be taken as a direct expense. Take the direct expenses. GST applicable? Yes, applicable. Then set or alter GST rates, take it yes. And here everything is same except one option. Here. See here, we have to give this is service, that is why SAC code we have to give. SAC code and all others, non-GST goods, no, transaction, no. And then here we have to go to we have to take taxable. So we have taken taxability, okay. So taxable means tax is paid. So whether the tax is paid under reverse charge or forward charge. Forward charge means nothing, we got after the tax, we'll go to the SAC rate. But here, this GTA, freight is liable for reverse charge. So that reverse charge, it is applicable for reverse charge is applicable for this service, it is to be enabled here. So where is the option then? So for that option, you have to go to F12. We already know when you are entering the GST details, all the details are not shown. We are going to this configuration, show the HSN code, show all the GST rates, all the different types of CGST, GST. We are making yes. In that only, enable reverse charge calculation. You make it yes. Reverse charge calculation. Then the option will come here. Is reverse charge applicable? It will be no. It will be no, but you have to make it yes. So reverse charge mechanism enabled. So in the company level as well as in the service ledger. Suppose there is a advocate fees, that is also applicable for, I mean, it is RCM is applicable for that also. For that also, we will make this as applicable. For other all the services, we need to only those services which come under the RCM, we have to enable this one. Others we need to enable. And the rate of tax for the GTA is 5%. So 5% given accepted for first step. Okay. And this is service, not goods. So select service and accept. So we created the GTS and GTA freight service and GTA we created, and other accounts, other ledgers we will create at the time of vouchers. Now see here, I will show one GST bill. GST bills I will show you. The GST bill I will show. That is the bill received from the GST. Here. So we'll go to voucher. In the voucher, In the voucher, you have to enter. See here. There are three: market, transport, and all this. Sorry, not this one. We will take up another one. We will take up another one. Okay. Let me take this one. The other one is inside this. Okay. Now we have to make the entry for transportation. So this is, we are purchasing the service. So the voucher should be purchases. Purchase account will not be there. Purchase account will not be there. And but generally we are dealing with all the goods and all these things. So we will be entering everything in purchases and sales. We will be using the what you call item mode only. Item invoice, because we are dealing with all the goods. So item invoice only we are using. In addition to the goods, if you provide some service also, it is also to be entered here. But if you are purchasing or selling only service, in such a case, for that entry, we have to use accounting invoice. Because we are purchasing service, we have to go to change mode, select accounting invoice. After this, again, you are selling goods, purchasing goods, then you have to go to item invoice. Here, 25, I am giving 1st April. Okay. Here, name they are taking, see here. RK Transport Service. So don't take it. See 07, and this supplier also, I mean, the recipient also 07. So same 07 means what it means? It is the within the same state. Within the same state means, and also both have registration numbers. So it is called as registered, and within the state means local registered. That is intrastate registered. So first we will take up local registered. So local registered transporter. Local registered transporter. And now, what is the service we are purchasing? We are purchasing GTA freight. So take as GTA freight is under RCM. GTA freight we are taking. What is the amount given here? 25,600. 25,600 rupees. Okay. So this is purchased from. But 1 minute I will tell you. See, this is purchased from the local GTA. So this is purchased from the local A. Local purchase or sale will be shown as in the list type of transaction, nature of transaction. Local, in the case of local, they'll just say purchase taxable, purchase exempt, sales taxable, sales exempt, sales related, purchase related. Only they will say only purchases for local. For interstate purchase, interstate sales, the taxable, exempt anything. So for local purchase, they will show. For interstate they will show. But here, in the case of purchases, that is service with GTA, local, registered, unregistered, okay, taxable. And in the case of interstate, registered GTA, it is taxable. But in the case of interstate unregistered, it is not taxable, it is exempt. So that's why if you take the type of classification of the transaction, it will be good. That is why here after this, the transaction is not coming. For that, what you have to do is go to F12, take under GST details, modify tax rate details of GST. Take enable this, make yes, and then see here. After this amount, it will show you the tax classification. In the case of goods, here we give purchase or sales account. That is the purchase of goods and sales of account. So after that purchase, if you enter this classification, window will open. Here, there is no goods. This is the service you are purchasing or selling. That is why at this point, it will ask you the reason. So automatically, depending on the party name and the party details we are given in the creation, so it will automatically take, but you need not give, you need to select. You want to select space bar, all the list will come. So purchase taxable, if you select, so it will show. It will show the purchase taxable, but automatically, even if you don't give this, even if you don't give, automatically it is taking purchase taxable. So purchase taxable it is taking, and here after this, we have to pay the tax. So for this tax, what I am doing is this CGST and HGST only for this purpose, that is for the purpose of GT, for the purpose of RCM, we have to pay the liability, we have to increase the liability, we have to do all these things. For RCM, separate CGST account. For all other purposes, for forward side mechanism, that is for all other goods and services, that is general CGST and HGST will open. For RCM, we open at CGST in brackets RCM. So here, this is local. I created this system. I created here. If you take this, I created everything same. Everything same. Even if whatever name you give, so duties and taxes, GST and CGST means central tax. That's all. But name will be changing the name, giving the name as RCM. See here, tax is not calculated because in the invoice there is no tax at all, because it is giving that tax is to be paid by the recipient of service. Tax is to be paid by the recipient of service means under reverse charge, the recipient has to pay. So here, so he has not mentioned the tax is not charged, but here also we cannot charge the tax. In the purchase voucher, we cannot charge show the tax, but we are liable to pay the tax. So it is not shown here, but this is not shown here. This is when you are purchasing, you are paying means it is X input. Okay, but we are liable to pay that is, but it is not shown in this. So here you go to, so it is not shown, but we go to tax analysis, Alt A and Alt F1. See here, the tax is shown. So 2,250, that is local 5%, 2.5 central and state 640, 1,020. It is showing. So it is showing, and here you see here amount of tax subject to reverse charge. Amount of tax subject to reverse charge. So this is taxable. This is subject to reverse charge mechanism. And here, as per the calculation, this is the amount. But as per transaction means in the voucher there is no amount. So as per transaction, this is the amount. As per transaction, calculation. As per transaction in the voucher, no amount is there. So that is showing. That means it will show like that. So we are liable for reverse charge mechanism for that amount. Okay. Next we will go to some other. Okay, we will close this. We will go to some other one. Local registered. Now we will take up, for example. So local registered. We will take up local. That is local unregistered. So registered or unregistered in the case of local. Okay. So GTA GTF rate. GTF rate, you will take up 25,000. 25,000. So, say, purchase from unregistered dealer. Purchase means local. Purchase from unregistered means local purchases from unregistered taxable. So, here also, tax is not shown. So, go to tax analysis, go to Alt A and Alt F1. See, for the local, see, purchase from unregistered dealer taxable. So, for this also, it is showing the tax. So, amount of tax subject to reverse charge. And here for as per calculation amount is there, but as per transaction in the voucher there is no tax. So we accept this. Okay, like this. And if you take a interstate registered also the same thing. Interstate registered also the same thing because the amount is taxable. See, interstate taxable GTF rate, for example, is given 20,000. That is interstate registered means it is taxable. So here interstate purchase, because it is interstate purchase taxable. So here go to this one. See here again, this is interstate purchase taxable, amount of tax subject reverse charge. Here purchase value is given and interstate means only IGST integrated as 5%. It is showing. Okay. Interstate registered. Okay. Interstate registered GTF rate 20,000 rupees. So it is completed. But you will take a interstate unregistered. So here interstate unregistered. Interstate unregistered. I told you already. See here GTF rate 20,000. GTF rate 20,000. Here you see this is interstate unregistered. The tax is not taxable, isn't it? Not taxable. Interstate registered, it is not taxable. Interstate registered and same state, intrastate registered, unregistered taxable. But interstate unregistered is not taxable. But here you see interstate purchase from unregistered, but it is showing as taxable. It is not taxable. It is not showing, it is showing as taxable. It is to be shown taken as non-taxable. It is exempt. So in this case, you have to press space bar and you see here interstate purchases from unregistered dealer exempt. You select that. You have to select that. Now you see, you go to I will put another one in another way. So interstate under unregistered, and this one, if you take GTA services, right? So it is showing 20,000 if we take, you see now, it is showing as taxable. Go to tax analysis, it is showing tax, but it is not taxable. It is showing tax because you don't know whether this is taxable or not. Generally, it will take everything taxable unless you give as not taxable. Unless you give as not taxable, because freight, we have given the freight as taxable at 5%. That's why it is taking. That's what we have to do here. You have to select this exempt. If you select exempt, if you take, now you go to this tax analysis. So it's not showing any tax, no tax at all. So like this. Okay. And then so 1 minute, sorry. Because we have changed the taxability. This one we changed. This one we changed. That's why it is showing here. It is showing error because why means accept as it is means it will show error in the reports, GST reports. There we have to correct under certain transaction. Instead of that, if you take override all the things, but we accept as it is. So we have to select O. So click O. So it will accept. So there will be no error in this. So here, mark. See here, we entered 4 vouchers. For the 4 vouchers, you see, and tax also, we are creating, that is CGST and HGST. We create as RCM. So we'll take BAL. I already created. See, interstate, not GTA, CG. CGST, RCM CGST, RCM IGST, RCM SGST. So for example, I will take out RCM, CGST, RCM. See, there is no amount because it is not entered. It is only shown in the calculation. In the voucher, it is not entered. So all this, you see this IGST, RCM, no amount is there. IGST, RCM, CGST, RGM, SGR charging, no amount is shown in these columns. Okay. Now we'll go to goal C and F, and if the purchases are made, then there is tax, that is we are liable. The liability is to be shown in the balance sheet. See, in the balance sheet, go to liability side, the liability will be shown. Duties and taxes, liability you have to pay. The liability is not shown because it's not calculated. And also, if you go to display more reports, go to O, GST reports, go to, see, this is purchasing the service. So it will be shown in the sales will be shown in the GSTR1, purchases will be shown in the GSTR2, and both will be shown in the GSTR3. So if you go to GSTR2, you see here. Here. There is a problem with the internet. So here, if you see this, if you see the report, that is display more reports, and then go means GST reports, go to GSTR2, because this is purchase. This is purchase, so it will be shown in the GSTR2, and sales will be shown in the 1. So this is purchase of service, will be shown in 2, and in 3B also, both service liability and ITC, that is sales and purchase, will be shown in 3B. So first we will show the 2. In this 2, see, there are 3 vouchers we have done. That is, one is 2 vouchers registered, 2 registered. One is local registered, another is interstate registered, another one is unregistered, local only but unregistered. So here B2B unregistered 1 and B2B both registered, that is 2. Interstate and intrastate registered, these are unregistered. So all the 3 they are showing the liability, because but in the books there is no liability, that is in the ledger accounts there is no liability. It is calculated in the tax calculation, tax analysis. That is why it is showing here. And that is what thing. This is the actually in the GSTR2, it is purchase, showing the purchase. So for the purchases, the tax will be ITC. On the purchase, the tax on purchase will be ITC. That is why it is showing as ITC. So this is the tax and purchases. This is the tax and this is the ITC we have to get. But this is the liability also. We have not paid. So we have to pay liability also. Without liability, there will be no ITC. That is why reward charge liability, this is ITC, and the same amount will be liability also. Liability and liability you have to pay, you will get the ITC. So reward charge liability this, and this is reward charge liability, because this is showing total amount, it is showing here. And if you click this, the details will be shown here. So 2 amounts, local, and 1 amount, whatever it may be. One is non-local, that is interstate, 2 within the same state, 5,600, 50,600, that is 2.5, 2.5, and 5%. And this is the liability. Liability is not shown in the books, not raised. So balance of liability. Okay, that I will tell you later. Okay, like this, it is showing the liability with book. What is meant by book? That I will tell you. So this is the thing. So this is in the GSTR2. We will go to GSTR3B. Here also it will show liability as well as import. So here in this question we go. So here, what is the dates we are given? Here, in this case also, full details are not shown. Only taxable amount and tax amount is shown. Details CGST, GST details are not shown. If the details are not shown, either in any report, in any GST report, go to F12, simple will come, simple configuration window. State tax types, show the tax types in separate columns, make it yes. And then another one is detailed, means in everyone contains many details. All the details will be shown. See, 3.1 different items, 3.2 different items. If you don't take this, if you take it as contains, it will show only 3.1, 3.2 table numbers and the respective amounts equal to, you will take this. If you take this, you will get the details, all the details you will get here. See here, now, it is a liability to us. Is it a liability to us? 3,530. What is the liability? This, the dark color is the total amount. That is the total for all these, all the, so this is total amount is shown here, and individual amounts are shown. That there are some more amounts. Total amount will be shown there. Here only one. So in this 3.1D, inward supplies, mean purchases, inward supply liable to reverse charge. So 70,600. So here 70,600. So if you take 70,600, if you click, it will come down. So here details are coming. If you click that, what are the 70,600 rupees? Two local registered, local unregistered, interstate registered, all the three. So for all the three, the liability is shown here. This is the liability. The net is giving a lot of problem today. Okay. So here in the GST 3B, so this is the liability, that is, see here, the inward supplies liable to reverse charge. It is showing all the three. So all the three it is showing. One is interstate integrated tax, and the other are local SCGST, HGST. This is the total amount. So this is the total amount due. And here, so that means it is giving here, like this is liability, and the same amount will be ITC also. So here eligible ITC, eligible ITC. If you go to details, it will show in the details eligible ITC means what is eligible ITC? A, B, C, C in the A, inward supplies liable to reverse charge other than 1 and 2. Liable to reverse charge, it is shown. This is the total. This is individual amounts here. And if you have any other ITC, that is our forward charge mechanism, it is all called all other ITC. So that will be shown here, all other ITC. But we are only this much we are having. So this is ITC. So liability as well as ITC. I told you, in the case of interstate unregistered, if you don't give the, if you don't check up and if you don't change that tax classification, it will show as taxable. So that will be also included in this one. But is not actually taxable. That is why here it is shown here. See, value of exempt or nil rated tax. So this is exempt and nil rated. Here you see exempted. See, it is showing as exempted interstate exempted. It is showing. So it will be shown in the exempted column. Otherwise, this will be shown here, and the tax also will be shown. But here no tax is payable. That is why no tax here, only it is shown. So this is the thing. So first it show liability, and it is showing the ITC also. And below that, if you come here in this case, liability, it is showing liability to be booked here. Reverse charge liability and input here showing both. In the THR2, it is showing only ITC, it is showing, and below that, it is showing as liability to increase. Here, it is showing both. So it is showing here, but in the books, you don't have. So we have to increase the liability. We have to increase that, and then creating. We have to create liability. We have to create ITC. That means increasing reverse charge, liability, and input tax credit, input credit to be booked. So this is the total amount. And how much? If you enter that, the list is shown there. Same thing here. This is the tax liability. Nothing is booked. We are not created. So balance is there. So if you create this liability and ITC book, this will close. This will come here. These are the books, and there will be no balance liability. So what you have to do now? You have to do is here. This is the liability. This is the liability. This is the ITC. So we have to book means create liability as well as we have to create ITC also. Both we have to create. So for that, go to journal. Go to journal. We have to create this. For this, we open the CGST, GST in the name of RCM. This is the creating the liability of CGST, GST, IGST for RCM. That's why CGST, RCM, IGST, RCM, HGST, RCM we will create. So that will be liability is created. Liability is credit. So all those are credited and total amount will be debited to one particular one account as asset. When liability is created, there should be an asset. One asset will be created against the liability. So liability will be increased, and after that, that asset created, that should be transferred to input tax credit. So input tax will be along with all other input tax. That will be general. That is only CGST, GST, not RCM. RCM is liability. And general CGST, GST you have to create. That will be the CGST and GST along with other input tax or liability. That is the general GST, CGST. So we have to create that one. And we have to create the liability, input tax credit as CGST, GST, and close down that asset. This asset is transferred there. Okay. After creating, I will tell you. Okay. So now we have to, first of all, increase the liability and increase the ITC. For that, what we have to do is, we have to go to ledger journal. But in the journal, we have should not enter directly journal. We have to go through the statutory adjustment, because last time when we are making the payment in composition, we went to control F, statutory, autofill statutory payment. Like that we have to. Now we are making adjustment. That is creating liability, creating what you call ITC. For that, it is called adjustment. It is called statutory adjustment. So on the right side, you see Alt J, stat adjustment. Stat means statutory. You have to click that, and then you see stat adjustment. Type of duty is GST, and the nature of adjustment, what you are doing? Liability you are increasing. So increase of tax liability. Liability you are increasing. Why you are increasing? So you are purchasing from purchase under reverse charge. So take that. So journal automatic open. So it is showing used for increase of tax liability. Additional details purchase from this one. So here we have to debit side. We have to open an asset that is called as you just to open that. Any name you can give. I am giving as tax under RCM. Tax under RCM we have to create, and this is created under see current asset. It is created under it is an asset. I have to get back that ITC. So current asset you have to create. Under current asset you have to create this, and here under current asset you are creating what is the total amount. What is the total amount? You can see that. I'll tell you here. 3,530. So 50,600 for the local and 20,000 for interstate. Okay. So stat adjustment, GST, then increase of tax liability and purchase from under reverse charge. So here CGST and GST we have to create. Now this one. So what is the amount we have seen? 50,600 into 2.5%. 5% total. Total is 5%. So 2,530 for 20,000. 2,530, 5%. So 2,530 plus 2,530. So total is 3,530. So total input is 3,530 rupees. Okay. Now go to credit. What else we create? We have to liability, IGST, CGST, GST. So first if you will take up, okay, CGST, RCM. So 2.5% of 50,600. Two bills total 50,600. So it is 2,530. 2,530. Then again CGST, then SGST, RCM. SG same 2.5% into 50,600, 2,530. Then again credit, IGST, RCM, 5% of 10,000, 5% of 10,000, sorry, 20,000, 5% of 20,000. So these are again, how much is this? 1,000 rupees. So sorry, 2,530 is total. So 2,530 divided by 2. So 1,265. This is 1,265, and this is also 1,265, and this is 5% of 20,000. So total is 3,530. So this is So 5% means the 2.5%, 2.5%. Okay. So we completed this. So liability is increased. Liability is increased. Now go to the balance sheet. See the balance sheet. Alt F1. See, duties and taxes, liability credit. So on the credits, liability side means credit. In this side, sometimes it will be minus. It will show as minus means it is an asset. Showing liabilities, duties and taxes is under the group. Liabilities, current liabilities, that's what it is showing on the liability side. Now you see, these are the three liabilities. RCM, we create RCM, tax, we created. So liability we created. And then what to do? Display more reports, then go to 3B. Now, here, see here, reverse charge liability and out is to be created, is to be booked. So here the amount is done. See here. So the when you book that liability, so the balance liability is gone to already booked. So no balance liability. Liability is closed. Now we have to create the ITC, input tax we have to create. So liability created, input tax created. So we have to go to same stat adjustment, GST, and now what are doing? Increase of tax liability is done. This is increase of input tax credit. So that we have to take by we are taking it as purchase under reverse charge. So that's all. And now here, see here, use for increase of input tax credit purchase under reverse charge. Now we are increasing input tax. That input tax is not a GST RCM. GST RCM is the liability. It is created and later it will be paid. Okay. Now CGST ordinary input tax credit means along with other input tax under forward charge, this is also will be included in that. That's why CGST and GST you have to take. Ordinary, our ordinary CGST, not RCM. That is only liability. RCM, you have to take 2.5% of 50,600, 1,265. Again, debit, take debit to show debit credit. On SGST, we take SGST 2.5 of 50,600, 1,265. Again, take credit, IGST, ordinary IGST, not credit, sorry, debit only take. Debit and ordinary, this one, in this case, 5% of 20,000. 5% of 20,000, it is 1,000 rupees. Okay, now credit, already we created an asset that is to be cancelled. It is to be brought. 1 minute, I will show you. So in the balance sheet, the balance sheet, you have seen this, Alt F1. So liability it is showing the liability that is duties and taxes, all these RCM liabilities. But the tax paid under asset we created, it is showing on the asset side, tax under RCM. And now this is to be paid now, will pay now, and this asset is to be brought to this side into the input tax credit. This is not input tax credit. It is an asset we created that is to be cancelled. It is to be brought into the tax duties and taxes. It will come to the debit side. Here it will show minus balance. Okay, minus side. So we have to take this now. DO. So, and now here 3B will go, and here stat adjustment. So GST increase of input tax credit because of purchase under reverse charge. Now we will take up CGST 2.5% of 50,600, 1,265. Again take debit, SGST also same thing, 1,265, and again debit IGST 5% of 20,000, 5% of 20,000, it is 1,000 rupees. Okay, and then that is to be cancelled. Tax paid under tax under RCM. Close the door. And that is given. And here one thing in the down, here you have to give the details. Yes, that is the thing is reverse charge details period from 1st April to 30th April. So it is 30th April, it will not take. That is why what I do is 1st May. So 1st May also is not taking because this is for June. That's why what I do is 1st April to 2nd April. 1st April to 2nd April. It's okay. So now what we did, we created the asset. Now we go to the balance sheet. See, go to the balance sheet. F1. See here. Checking mechanism. Go to this one. Here, first you go to this one and go to reports and you choose 3B. Here also this is completed. This is completely completed. You know, we completed this one. Reverse charge also we did. Now we go to DAL. See, CGST. So debit IGST, TGST is there. And debit means it is input tax credit. So it is there. And IGST also. And see this tax under RCM. So it is closed. Because first we created, that means debit, then now we close it. So it is closed. So that is closed. Now we have to go to the balance sheet. Go to balance sheet. So balance sheet will take from 1st April to 1st April, 2nd April. So here, duties and taxes, this tax is completed. This is already gone. But duties and taxes we are not paid. That is why that is not shown. And here DAL and CGST is showing liability, is showing liability. This is all listen. CGST, IGST, RCM is showing liability. Now what we will do is we will pay off the tax under CGST. Increase of input tax credit, 1st April. CGST, HGST debited, and it is okay. Now what we do is we have to pay the liability because tax liability is created and input tax credit is created, but input tax credit created means claimed, but we cannot use that. We cannot set up the against the liability, other liability, because once you pay only you can claim that, we can use that. That's why liability we have to pay now. Liability we have to pay now. We have to pay the liability. So here liability payment means go to F5 payment voucher. In the payment voucher we have to go. Here also we should not get debit taxes, that is debit what you call RCM CGST, RCM GST and credit bank. We should not take. We are paying the statutory liability. So we have to just like composition. See, control F, take, so autofill, start payment, statutory payment, we are paying GST. Why are we paying? We are paying recipient liability, RCM tax we are paying. RCM is recipient has to pay the tax. It is called as recipient liability. We are paying 1st April to 2nd May I will give, because we'll give 2nd May on the payment date also I'll give 2nd May, because next month 18th we have to pay. Next month this RCM is to paid. Next month 20th 3B will be filed 20th of May. For April we file on 20th of May. On that date we have to make the payment, but that day will not take. So I am taking 2nd May. So what you are paying now? The GST we are paying recipient liability. What is that? The liability which we created. So HGST, CGST, RCM. What is the balance? 1,265. 1,265. Again debit. Then HGST, RCM. That is 1,265 is the balance. Now it is 0. Again debit. IGST, RCM. IGST, RCM. The balance is 1,000 rupees. We completed to bank. Generally tax will be paid by bank only. Through bank only. So bank it is paid. And here, so how we are paying? So we take e-fund transfer and then paying an NEFT. NEFT we are paying 2nd May. And here you have to give the details, payment details. Take yes, and here mode of payment NEFT, and then bank SBI. Okay, and the numbers will be given by the bank. That will be entered. Payment date 2nd May. So amount is paid. So taxes are paid. So like this we have to do. But in the display more reports and this one. So in this case also the liability is gone. This is only the input tax credit 2000, 3,530, and in this input tax credit as well as, so this is liability as well as this ICC, and here also this is completely closed. Okay, liability is closed. There is no liability. Okay, now we will go to the balance sheet. We will go to the balance sheet. See, Alt F1. See here, bank account is credit balance because bank is a credit balance. You see, duties and taxes 3,530 means debit. That is input tax credit. That is why it is showing as minus mark. Liability is a credit balance. It is showing liability. It is showing minus means it is an asset, but duties and taxes is under the group of current liabilities. That is why showing on the liability side only, but it is asset. It is showing debit balance. See the debit balances. Okay, there is a debit balance, and on the asset side there is tax on RCM. So that is closed and transferred to, that is closed, and this ITC is created. So that is gone. And we are paying through bank. Bank is showing a credit balance. That is why it is showing on the liability side. It is a credit balance. Bank is no credit balance. So it is credit. And if you go to see the RCM tax, so GST. So here you see here it is created under RCM on 1st April. We created the liability. Now we paid the liability. Same everything like that. So IGST also take this. So it is April, it is May. That's why I'm changing the date. So 1,000 rupees created, 1,000 rupees paid, and SGST also. So 1,265 created, 265 paid, which is closed. So liability created, closed, and RCM liability. I mean other general input tax credit from asset side we transfer to the duties and taxes as input tax credit. It is shown in the balance sheet. So this is how we have to make the entries for the reverse charge mechanism. Okay, this is how we have to change the reverse charge mechanism, and with this today's our topic is complete. Understand? You see, this is very, very important. The reverse charge mechanism is very, very important. The composition scheme, reverse charge mechanism. So in many institutes also, they never do all these things. Just they will explain the theory. What is composition? Just explain the theory. And what is reverse charge mechanism? They will explain the theory. Or sometimes some people, they do manually. How you know? How they will do it manually? Manually means just they will do the vouchers. In the vouchers, so here purchases are they put journal debit what you call purchases na GTA freight JJ freight, for example 50,000 freight, and debit side 50,000 freight, again debit side CGS GST, again GST whatever it may be, for example 500, and again debit side again CGST, and again SGST 500, and again the credit side again CGST 500, and again SGST other SGST 500, and credit the transporter, whoever may be transporter, the transporter, one transporter, for example GTA local registered, for example local registered 45,500. 500. So 50,000 rupees the GTF rate. The 50,000 GTF rate will be paid to them. So debit, they will take this as input tax. They will take it as liability. Okay, both are giving the same name. So this is manually they will do. They don't know the settings and how to make the things, and they don't know accounting treatment. Simply they will tell you in the normal way, that is manually debit, credit. Debit is input tax, credit is liability. They will do like that. It's not the thing. So what we did is the thing we have to do. Okay. And now, so that is how I closed it. So that's why manually they will do. That is on the journal GST. Then, for example, not CGST. First they will take the freight. They will take the freight. For example, 50,000. Right? For example, 50,000. Again, debit CGST, for example, 500. Again, debit SGST, not RCM, just ordinary, 500. Again, credit CGST, 500. GST, 500. Again, credit SGST, credit SGST, credit SGST, 500. And then credit the transporter, for example, local visitor, the transport 50,000. So transporter 50,000 is ₹50,000. They will take journal means they will take journal only. Journal will give the tax, that name, that number will give, and ₹50,000 they will show. So ₹50,000 they will show something. They will not show anything here. So like this, they will show journal. This is input tax. This is liability. They will show both as in the same way. That just manually. This is not the thing. So they don't know how to make the entries. So that's what they do. Institute and RCM in reverse, composition. They don't know at all. Just they will explain the theory and leave it off. So they will know how to make all the settings. Many institutes also they do like that. Okay. So this. We complete this topic today, and I wish you all the best. You will get good knowledge, expert knowledge, and become expert accountants, and wish you all the best. And